Hi folks, it's Steve here again from the Forex Codes, making money making indicators even, part 2, the TFC Cloud. This contributes heavily towards my 0.5% a day. Let me show you how. Okay, a bit of history. Right, this is called the Ichimoku Kinko Hyo. Just slips off the tongue, doesn't it? So let's look at a bit of history of this. Some of you may not have heard of it, some of you may have. A bit of history. Not a history teacher, but I did used to be a physics teacher. Okay. A technical indicator published over 50 years ago in Japan. But even that isn't a long time, is it? Developed by a Japanese newspaperman, of all things, a reporter, named Goichi Hosoda. My apologies for the Japanese who think I've got that completely wrong. The system itself was finally released to the public in Japan, 1968. After more than 20 years of testing. Now that's a lot of testing, but that's supposed to be true. And even with such wild popularity in Asia, Ichimoku did not make its appearance in the West until the 1990s, which is why you might not have heard of it. You know, it's not fashionable. Then, due to the utter lack of information in English, because not a lot of us can understand Japanese, can we, on how to use it, it was mostly relegated to the category of another exotic indicator by the general trading public. And this was a mistake, because what the public learns when they first start, and in fact where they've been going for years, is the same old regurgitated crap that keeps being sent down by the brokers, and by teachers and gurus. They keep repeating the same stuff with their MACDs and RSIs and CCIs and absolute garbage like that, when the real stuff is left on the shelf, which quite frankly is good for me, but not good for the general trading public. And only now in the early 21st century are Western traders really beginning to understand the power of this indicator. You know, when I wrote my book, the book on Forex trading, that was in 2011, and I had this in there then. Ichimoku, one look or at a glance. Now, where have we met that before? If you remember part 1, TFC candles and waves, you know, I mentioned that an 8-year-old kid can do this just by looking at the colour of the candles and the wave and the clock angle of the wave and stuff. At a glance, you can look at it at a glance and know whether you're long or short. And this adds to the one look or at a glance situation. And now you've got 2 indicators, which you can look at a glance. It measures market sentiment and trend, and also outlines levels of support and resistance. We don't actually use this for support and resistance, but we use it for market sentiment and trend. And Ichimoku means one look, or at a glance in Japanese. And this reflects the indicator's intent to measure multiple aspects of the market at once, like sentiment and trend. Okay, so the point here is, again, at a glance. Now I keep going back to this 8-year-old kid, but it's just a fact. Give these 2 indicators to an 8-year-old kid and say, what's the trend? What do we do, what don't we do? And that kid will tell you. So why can't adults do it? Right, Kumu. Kumu. Lots of Japanese for you today, folks. We only use the Kumu, or cloud, part of this indicator. Kumu, Japanese for cloud. My mentor was very keen on this. If you read my article, maybe on the website blog, Reflections of a Forex Trader, it gives the full story of how I met my mentor, travelling first class, the only time I ever did that, on a plane to the States. So you must read that and go to the website for that. So we'll just use the cloud. Now the Kumu, or the cloud, is the very heart and soul of the Ichimoku Kinko Hyo charting system. Perhaps the most immediately visible component of Ichimoku, the Kumu, the cloud, enables me to immediately identify the prevailing trend and price's relationship to that trend, and again, at a glance. We need to be able to look through charts and currency pairs and time frames quickly and make decisions. So, this is the cloud. Okay. The Kumu, or the cloud. There's a lot of other aspects to Ichimoku Kinko Hyo which I don't use. The Forex Course doesn't use it. We just use the cloud and it works for us. So, you know, let's use what works. So here we've got the wave, the TFC wave, and the TFC candles. See them in green and red? If you don't know what these are, you must look at the part 1 video and get up to speed on that. Put in the work, folks. So that's the cloud, you can see it. Here price is going long through the cloud, short through the cloud, long through the cloud, and then very short through the cloud. Okay, and there's the cloud. A little bit of technical, but this is all you're getting. You know, when I drive my car, I just want to get from A to B and know how to drive the car. I don't need to know the inner workings of this. I need to know how to use it. Now, you'll have seen this all around. A lot of Forex traders want to know all the tech. They want to know the indicator inside out. What does it do? You know, and they're fantastic at this. But they can't make any bloody money trading because they don't know how to apply it. Apply the indicators and know how to apply them. That's what makes the money. If you want to be a techie and look at it, the technical aspects of indicators, that's not trading. Okay? Let's just be clear on that. So the Kumu itself, it's comprised of 2 lines. The Senkou span A and the Senkou span B. Each of these 2 lines provides their own measure of equilibrium. Between these 2 lines lies the cloud, the Kumu, which is essentially a space of no trend. So inside the cloud is a space of no trend, where the price equilibrium can make price unpredictable and volatile. So we don't trade when price is in the cloud, because that's the equilibrium level. Trading within the Kumu is not a recommended practice. And in the next diagram, the TFC Cloud is shown as a cloud almost like a 3D ribbon. You saw it from the last slide, actually. So you can see the cloud. And it is like a ribbon, isn't it? Look at that. Like a 3D ribbon. The Senkou span A top line, Senkou span B bottom line, and in the middle of those 2 lines is the Kumu, the cloud, and that's the equilibrium point. We don't trade when price is inside the cloud. It's very similar to the TFC wave, where we don't trade when price is inside the wave, you know, when the candles are blue. So that's 2 indicators and 2 aspects of when we don't trade. Okay. Price above the cloud only long, price below the cloud only short. So the Ichimoku cloud, which I'm going to call TFC Cloud, gives us the decision on which direction to trade. Above the cloud only long trades, below the cloud only short trades. That is, price above the cloud only long trades, price below the cloud only short trades. A break through the cloud and a subsequent move above or below it will suggest a better or more profitable trade. Now we're going to talk about uncluttered charts. I don't actually have the cloud on my charts. I unclutter the charts. So instead of cluttering the chart with this cloud, the traffic lights version, I just couldn't think of a better word off the spot, is used at the bottom of the chart. So I have traffic lights at the bottom of the chart that substitute for the cloud. Let me explain. The lights turn green when price has moved up through the cloud. Okay. The lights turn yellow when the price is inside the cloud. Remember, we don't trade when price is inside the cloud, so yellow is keep away. And the lights turn red when price falls through the cloud, hence the term traffic lights. This gives us an instant visual, a one look, or at a glance if you like, as to where the price is in relation to the TFC Cloud. If it's a green light, we know that price is above the cloud. Yellow price is inside, red prices fall through the cloud. And then we can look at those lights and look at the TFC candles and wave and see where price is there. Now if they both agree, we're onto something, aren't we? So here's the cloud, but instead of putting the cloud on, we put traffic lights on. So you can see price here is below the cloud. Okay, so you've got red lights. Each time a candle is below the cloud, it produces a red light. This is a 5-minute chart, so this is every 5 minutes. Red light means candles close below the cloud. Here you can see this candle closed inside the cloud, equilibrium, hence yellow light. You don't trade with a yellow light. Now, all the way here, your candles are above the cloud, and you're going to get a green light. Okay? As you can see, if you combine now both indicators, you've got the cloud, green lights, then you've got the TFC candles and trend, candles and wave. You can see you've got, like, if you do Japanese candle studying, and I use a few of the patterns. This is railroad tracks here. But anyway, price comes up, retests the wave and goes again light green. So you've got light green above the wave and you've got green light. There are other indicators to come, but that will be enough to go along there as an example. Okay, so now we've got rid of the cloud altogether and we just have the lights. See how cleaner the chart is, and we just have the lights. So this is a 5-minute chart. You've got the M5 cloud and the M15 cloud below it. So both times frames would have to be green for me to trade. So cloud not showing, less cluttered. Agreed? And we just have the lights. Standard settings. The standard settings for the Ichimoku Kinko Hyo are 926.52. It looks very much like standard settings for MACD. There is some debate around whether or not these settings are still valid, given that the standard work month in the West does not include Saturdays. Apologies to everyone who works on a Saturday. I don't, unless I'm making videos, of course. In addition, in non-centralized markets that do not keep standard business hours, like Forex, which trades around the clock, so that affects the settings. Now, over many years of experimentation, the Forex codes have tested and developed our own settings that work well with our own systems. Oh, that's over the last 8 years. Yep. We've got settings that work. And I bet you if some people take this indicator from me, they'll still mess around with the settings because people are just like that, you know, instead of making it work. But anyway, we've got our own settings for this. Let's have a look at price's relationship to the cloud, to the Kumu. And just to recap, in its most basic interpretation, when price is trading above the cloud, above the Kumu, that is a bullish signal, since it indicates current price is higher than the historical average. Okay? Likewise, if price is trading below the Kumu, that indicates bearish sentiment is stronger. And if price is trading within the Kumu, equilibrium, that indicates a loss of trend, since the space between the Kumu boundaries, Senku span A, Senku span B, is the ultimate expression of equilibrium. TFC Cloud and trend trading. Important. It must be understood by any of you who wish to use the power of the TFC Cloud that it is first and foremost a trend trading system, and it goes hand in hand with the TFC candles and wave. I think you can see that, and we'll show some more examples. It's a trend trading system. This is a key point, since knowledge of how to trade the trend is absolutely critical to long-term success with the TFC Cloud, and in fact with the TFC candles and wave. The TFC Cloud on its own will not teach you the underlying philosophy of trend following, so we must use other confirming indicators as shown in the whole of this video series. So please subscribe, like the videos, tell your friends, such as TFC candles and wave, the TFC tricks, TFC squeeze, TFC volume, and the ADR. And I'm building a pattern. We've seen part one, this is part two, and I'm going to build a pattern for you to see how these things work together. Multiple time frame, MTF version. The MTF version is absolute magic. It really is, because if I'm on the 5 minute, I don't just trade from the 5 minute. I want to know what's on the 15, the 30, and the 1 hour. If I'm trading the 30 minute, I want to know what's on the 30 minute, the 1 hour, the 4 hour, and the daily. I want to know what those clouds are doing on those different time frames. If they all agree, I'll trade. So the MTF version, the multi-time frame version, is used and shows us the status of the TFC Cloud on multiple time frames at a glance. You can look at a chart and in 5 seconds know if you're going to trade, you're not going to trade, what the trend is. It shows the current time frame plus the next 3 higher time frames. For a long trade, all 4 time frames must show green lights. Yes, sometimes if I'm taking an aggressive trade, I'll allow the first 3 time frames to be green and go. But that's a rare occasion. By the book, all 4 time frames must show green lights. For a short trade, all 4 time frames must show red lights, of course. The next slide shows a 5 minute chart with the 4 TFC Cloud time frames, which would of course be the current chart 5 minutes and the 3 higher time frames, M15, M30 and the 1 hour. Right, busy chart, so let's have a look. We get the change of trend here. This happens a lot, and I use this a lot, the 1, 2, 3 pattern for change of trends. 1, 2, 3. If you stick with me and watch my videos and live trading and such, you'll see I use this 1, 2, 3 pattern a lot for signifying changes of trend. Anyway, that's a different story. But we're saying there's a 1, 2, 3 pattern here showing a possible change in trend. And you can see it goes up again, the wave's respected, and goes off again light green. At that time, all 4 lights, all 4 TFC Cloud lights are green. Green for go. The wave respected, the candles are light green, you can go along. Now, I do have other indicators, as you know, but I'm not showing them because I'm not going to complicate things to begin with. On the 2 indicators we've seen, that's a long trade from the close of that candle. Of course, up it goes and up it goes. So you've got 4 time frames agreement, wave agreement, TFC candle agreement. Okay, so we're beginning now. We've got 2 indicators, 2 videos, we're beginning to combine them, and you can see. Let's have a look at a short trade. This is a 30-minute time frame. You know, you can use this on any time frame. Price falls below the wave, respects the wave there, and there it's not really closing above the wave. I'm happy with that. Now you get a big red candle there. An aggressive trade, you'd go short at the bottom of that red candle. Conservative, wait for the close of the next candle when this low is broken. Okay, all 4 TFC Cloud time frames are red. Yep. Ichimoku Cloud telling you trend and sentiment is short. Correct angle on the wave and red candles go short. 80 pip trade. That's a 30-minute time frame. At a glance, you can see that at a glance. If you can't, ask an 8-year-old kid. Another example, you can see here, now this trend came up, up, and you were getting your greens there. But what we're looking at here is a 4-hour chart. Now the 4-hour chart, this is the point, I only use 2 TFC Clouds on it, and that's the 4-hour and the daily. Just through experimentation over the years. So, price falls through and retests the wave and comes off. Okay? At this point, both TFC Cloud timeframes are red, and you've got red candles. Aggressive trade is there. Conservative trade is the break of that low. Aggressive trade is 200 pips to the bottom. The other one is 150 pips to the bottom. Either way, good trade. And again, you can see it. Where's your stop? Above the top of there. In conclusion, as a charting system that is purpose built for trend trading, the Ichimoku Kinko Hyo can provide the savvy forex trader, which of course all you are going to be, with a much deeper view of the trend and therefore more secure entry and exit signals than any other trend trading system available. That is a fact. And if you combine it with the other 5 of my indicators for confirmation and confluence, you really do have a good trend trading system. So let's take a look at some live examples, and I'm just going to go straight to the charts and show what's on, warts and all. This is not rehearsed, I'm just going straight to the live charts. So let's take a look. Right, we're on the dollar yen 15 minutes. Now, I've only put on here the two indicators that we've seen so far, the TFC candles and wave, right, and the TFC Cloud. So because this is a 15-minute chart, you've got the 15-minute Cloud, the 30, the 1 hour and 4 hour. So all these lights have to be the same color. In other words, for a long, the Cloud has to be up through and close through long above the clouds on all 4 time frames. You can see from the wave and from the blue candles with a lot of sideways stuff going on, and then it suddenly breaks into a trend. You got a 1, 2, 3, 1, 2, 3, and then up. You can see the wave starts to go up, candles are light green, and then at the same time here all 4 TFC clouds are green. So you can go green on any of these candles here, or wait till that's broken, okay, and then go. And maximum 24 pips in that trade. So that's one example. Let's go on to another one. Let's try a 1 minute chart. This is Euro Yen 1 minute, and the 1 minute chart, same as the 4 minute chart, only has 2 time frames here on the Cloud, 1 minute and 5 minute. Current time frame and 1 time frame higher. I found through experimentation this is enough. Adding more time frames didn't add any more money making capabilities. So looking here, you've got a lot of blue. The candles, the waves at 3 o'clock, nothing doing, that it starts to come down, starts to respect the wave, see, starts to respect the wave and comes off again, respects the wave, comes off again. Anywhere here you can go short, anywhere here. You can see both TFC clouds are red and your candle's red on the TFC candle. So anywhere around there. This is only 1 minute, so you're not going to get mega pips. But I mean, 15 pips on a 1 minute. If you can get 8 to 10 on a 1 minute, fine. Take it and go. That's a 1 minute. Now we do get a change of trend here. 1, 2, 3, or 1, 2, 3, and then a change of trend. You start going light green. See how these start going green? So any of these you can take the long. Can you see? Both are green, and so on. That's will be slightly more aggressive because I'm not 100% sure about the angle there. But you get the drift. Let's have a look at something else. Euro Chef 30 minute. Euro Chef 30 minute. Now you've been in a downtrend. It's come back to the wave, which is great, respects the wave and comes off. Now if you're just trading the wave and the candles, you could go short there, but we're not. We're using the Cloud too, and what's the Cloud telling us? The Cloud is telling us at that point red, 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 but we got a green. The daily is still green, showing uptrend on the daily. Now as I said previously, an aggressive trader will ignore the daily and just go short there. A conservative trader by the book would not have taken that trade because the TFC Cloud daily is still green. In other words, price is still above the Cloud on the daily. Aggressive trader takes it. By the book trader conservative, that's not a trade, even though it would have made 26 pips. It wouldn't have been taken, certainly not by me. Let's take a 4 hour trade. Euro New Zealand dollar. On the way up, it's come up, retested the wave, and look at that beautiful engulfing candle, light green. Fantastic point for a long there. So you took it on the next candle. Okay, you took it on the next candle. 1 second. $250 pips if you went all the way. But can you see? Everything green. Okay, we get a change in the wave. 1, 2, 3. There's your 1, 2, 3 change of trend. Price comes down, back up, and then down again. If you're going to take this trade, you can't take it until you wait for the break of the low, break of support there. So somewhere around here. And if you're looking at that, that's red, good angle on the wave, and both the 4-hour and the daily TFC Clouds are red, so you can take that trade. What would that have been approximately? Breaker there, 158 pips. So, are you getting an idea of the TFC Cloud, the Ichimoku Cloud, sentiment and trend, combined with the TFC candles and wave? I hope so. One more. Let's have a look at gold on the 5-minute. Gold on the 5-minute. If you look on the upside, you've got a 1, 2, 3 here, 1, 2, 3 here. Then everything starts going light green, as you can see, and the wave starts pointing up. Any of these candles here. Let's have a look at the TFC Cloud. Yep, round about there, everything goes green. On that candle, the 1 hour here is still not green. It's yellow. So the earliest you can take is that, which is great. Top of that candle. That's just on a 5-minute gold chart. And it's a nice run up. 22 pips if you like. Now it changes direction, doesn't it? 1, 2, 3 down. 1, 2, 3 down. Now it starts to come down again, starts to come down again, starts to come down again. Goes and respects the trend there. You've got a decent angle. Anywhere around there you can go short. Let's just see if the TFC candle allows you to. TFC Cloud, yeah. Yeah, as you can see. I hope that gives you an idea of what I look for just on those two indicators. There are more indicators on this chart that would have kept me in or out of some of those trades. But we'll take this thing one step at a time. That's it on the TFC Cloud. I hope you found that useful. Folks, we need more views. We need more subscribers. If you think this information's useful, please like the videos, share the videos, and make sure you subscribe. Tell your friends. And remember, how you do anything is how you do everything. Take care, and the next video will be out in the next few days.